Ladies and gentlemen, welcome back to the channel. Just when you thought all hell was gonna continue to break loose, what the markets do, they ripped higher from the lows, a round trip move of about 1.5%. AMC stock, what are you doing? Well, not following along. AMC stock is continuing a downside move, had virtually no participation in this upside bounce today. We're going to go ahead and get into everything you need to know as an investor in this market, as an investor in AMC stock, as a trader waiting for the MOAS. We have it all for you and much more in this video. Let's go ahead and get straight into it. Hit the like button and subscribe to the channel if you like money, if you want to make some more money, and you want to reach financial freedom as quickly as possible. That's what I got for you. Let's go. So AMC stock, $7.61 per share. You're doing nothing. You're trading sideways. Nothing is happening, okay? You're down about 4%. Like I said, you've seen a huge bounce off of the lows today. Look at this candle on the S&P 500. That is absolutely out of this world extraordinary. Okay? What is that? That's just, I mean, that's insane. Okay? It's like you got news, but you didn't get news because nothing actually came out. Same candle on the NASDAQ as well. It's just an absolutely epic move. At the same time, like, bonds are selling off. The dollar is continuing to rise. I mean, there's really no reason for this. So we'll ultimately see what happens. But as far as AMC stock, it's really not participating at all in this move that we're seeing in the markets. Quite the opposite. AMC stock continuing to sell off. Now, again, you can make the argument that AMC stock has just been selling off, trading sideways, doing its own thing for a long time. So nothing too much to actually see here. If you look at the MACD is pretty positive for AMC stock, and that continues to be the trend. Yellow line is above the blue line, so that is great. As we do continue to trend higher, the situation looks more and more bullish. Okay, situation does look more and more bullish for AMC stock. The risk to reward proposition, would you rather be long here? Would you rather be short here? AMC stock has fallen a lot, so you would rather be short here. Okay, you could almost turn that into an M&M rap. So you'd much rather be long here. Okay, you don't want to be short here. And I think that's very much the way to think about this heading into the end of this week as fiscal year 2023 is wrapping up and coming to an end. You're going to see a lot of hedging. You're going to see a lot of covering. You're going to see a lot of bullish positioning in AMC stock. Do not forget that. That is going to happen. And at the same time, you are flattening out and the technicals are supporting that we have kind of bottomed and that we could actually continue higher from here. Now let's go ahead and take a look at the Ortex data here with AMC stock. You do have a short score of 67 with $175.21 million worth of short positions currently on AMC stock. Estimated short interest of free float at 11.2%. Free float out on loan at about 14%. Shares out on loan 27.34 million. Days to cover at 1.96. Cost to borrow 5.56%. And utilization at 55.58%. If you take a look at the cost to borrow fees here today for AMC stock, around 2% on Interactive Brokers, 8% here on Ortex, and 3% for the cost to borrow average. Again, we just haven't had that much upside volatility, so there really hasn't been a reason for cost to borrow fees to be higher than that. That's the thing. We just haven't seen that upside volatility like at all. Now, if we look at the exchange reported short interest numbers, we're getting a short interest of free float at 11.2%. That is because the amount of shares outstanding has recently been growing. At the same time, the amount of shares currently sold short still sits at near all-time high levels. If we do go ahead and take a look at the FTD numbers that we are going to see throughout the rest of this week, today is September 27th. That means about 51 million FTDs come due per the T+35 settlement time. So we'll see actually what happens. It does not look like much of those FTDs are actually being covered on anytime soon. It doesn't look like they have been at all ever been bought back. So we'll see. Maybe that's why the short interest of free float looks so small now. Maybe it's just because we have 50 million phantom shares out there. Is that a crazy possibility? I don't think so. We'll see. I think these things will get resolved over time. We'll get more clarity as we normally do. Now, take a look at the stock tracker data as well. The option activity for this week is exceptionally bullish for AMC. You have calls in the money of 5,501, calls out the money 120,000, puts in the money 24,100, puts out the money at 40,535. Some absolutely insane numbers you are seeing over here for AMC stock, which is very, very bullish as well. I mean, you would much rather have a high call option activity, week than a put, high put activity. And that is what we are seeing today. It's been a very long time since we have actually seen the calls outpacing the puts by such a large margin. So I think that is very, very good. Now, take a look at bond land today. Bond land today is absolutely crumbling and dying. Okay, bond lands are dying. If you take a look at the 10-year treasury yields, 10-year treasury yields are up about 6 basis points today. Take a look at TLT over here on the charts, your longer end curve, just absolutely getting blown out to the downside. Okay, this is bad for the banking crisis. This is bad for equities. This is bad for yields, right? This is the yield curve inversion is uninverting, continuing to uninvert today. And just look at bonds. What has happened? I mean, it's not great, especially for those banks that have all those unrealized losses. Those unrealized losses are getting even larger after today, and this is not great for equities. I still don't know what caused this big bounce. It looks like there was some news to me. I'm not seeing any news, but if we get news, I will bring that to your attention. You also have the price of oil, which is up about 4% today, as you guys know, from 1945, the end of World War II. Every single recession you have seen, you have always seen a spike in oil before that recession. So it looks like the spike in oil is spiking and the recession could be right around the corner. At least that's what it looks like to me. And I don't want to see a recession, but that's unavoidable at this point. Okay, let's just be honest with ourselves. Let's not kid ourselves. That's unavoidable at this point. If you look at the yield curve inversion as well, you'll notice every time right before we go through a recession, you get an uninversion in the yield curve. And this is happening because the short end of the curve is stuck at about 5.1 to 5.2%, and you're seeing the 10-year bonds continuing to rise at a faster pace than the short yield curve, right? At the short end of the yield curve is what it's called. So you're getting the long end rising, the short end staying the same, you're getting an uninversion. Now, if that uninverts all the way, well, again, you get that right before a recession, or you could see the uninversion actually take place by the Fed signaling they're going to cut rates or actually cutting rates, and then you get the yield curve uninverting by the long end staying high and the short end going down. If you guys don't understand yield curve inversions, how that affects the markets, highly recommend you guys learn that and learn what to be watching for. And right now, it is sending warning signs in the bond market, something you definitely do not want to ignore, because I mean, the bond market is 3 to 5 times larger than the stock market. The bond market knows what the stock market does not know. Now, we also had some pretty interesting stuff come out just a couple of days ago. Goldman Sachs predicts credit card losses will continue to climb through the end of 2024 and early 2025. What is unusual is that losses are accelerating outside of an economic downturn, the firm said. Credit card losses currently stand at 3.63%, up 1.5 percentage points from the bottom. So, situation not looking all too good out there in the economy. Another look at the AI investment sentiment chart as well. 31.1% of individuals are bullish, 34.1% are neutral, and 34.6% are bearish. So in the grand scheme of things, you could fall a lot more just to price in this recession. I think that's why markets have been falling recently, just trying to price into some degree of recession. You haven't priced in fully that recession. Now, tomorrow, you're going to get some data coming out. You're going to get the Q2 GDP numbers, finalized numbers. But at 4 p.m. tomorrow as well, you are also going to get Fed Jerome Powell. Fed Jerome Powell will be very important for our markets if he does solidify that same kind of bearish stance that he had, you know, that's obviously not going to be a great thing for the markets as well, guys. So that is going to do it for this video. There's not too much else to actually say. There's not too many changes that are actually happening out there. Besides this big bounce in equity land, there's not too much else to actually speak of that is newsworthy. Again, on AMC stock, you do have the yield curve, which is you know, uninverting. That's not great in the short term. AMC stock is not exactly the stock you want to own during a recession, so it's down about 4% right now, but you're still just in this bottoming process. The MACD looks very strong, and the RSI looks like it's slightly oversold. If it does continue to trend kind of higher, that's going to be great, but who knows? I don't know. Who knows what's going to happen? Odds are you don't go much lower from here on AMC stock. It looks like the only way to go is ultimately higher. That's my personal opinion. That's going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.